Okay, so we're gonna look at our trade today in NZD/USD. First of all, we go to the US dollar, which is the driver of all the USD pairs. And we see in the US dollar that in the weekly time frame, we already have that reaction into liquidity with that high being liquidated there. At the same time, we see a 3 touch point trend line here. And from that 3 touch point trend line, if we go and zoom in and refine to the daily time frame, we see that there was a reaction to that, a sort of rejection to that upward trend line there, forming those 3 touch points. And if we look at the 4-hour time frame, we see that this was the most recent swing low to swing high. And we see that internally, price in the dollar was moving with higher highs and higher lows, making that bullish order flow. And so we were careful to wait for a rejection first and a clear break of structure. And so we see that Thursday, early Asia session, we had that big impulse down with that swing high to that swing low. And we see that price came up into premium pricing above 0.5 Fib, into that supply zone, into that last area of liquidity, liquidated that. Look at the daily time frame, we see a strong reaction to that liquidity in the daily time frame through that wick. And we see in the 4-hour time frame that right now, we see that bullish order flow going to that liquidity, now being broken down and now being bearish. And so this lines up with the last remaining liquidity over here in discount pricing below 0.5 Fib. And we projected that price would now find its way down there and liquidate that area of liquidity before it makes another move up, or it can also move down from there. With that bearish USD in mind, we go to the NZD/USD, and we see in the weekly time frame that NZD/USD has actually reacted from the same kind of trend line rejection. We have that 1, we have that 2, we have that 3 trend line rejection in NZD/USD. And we see in the daily time frame that it has now had a reaction to that trend line. And if we go to the 4-hour time frame, we see that that reaction was actually sustained since the last week of June, making these higher highs and higher lows and making that bullish order flow. And we see the most recent swing low to swing high situated over here, that swing low and that swing high. And we see price come down and find its way into that liquidity below 0.5 Fib. And once it liquidated that liquidity, price was still very impulsive on the way down. And so we waited for a fake out. This was the fake out in my opinion. After that, we have that internal liquidation. So we have that external liquidation, that internal liquidation, and finally, that change of character that broke market structure, creating a new and valid area of demand in the 4-hour time frame situated over here. And so we see price come up, and we were waiting for a retracement from there. On the 30-minute time frame, we see that there was liquidity over here, and we were waiting for that to come down. And as it came down, we see that reaction in the 1-hour time frame, changing character over there, making that double confirmation that we were looking for. And after that, we held that overnight. Right now, late Asia session to Frankfurt session, we see price coming up aggressively into our TP. We could have held this for longer, but I was only eyeing the first liquidity point from that batch of descending highs. If we extend that, we see that it has liquidated that. And in my opinion, it can still go up. However, we are a little bit more conservative now, especially with the news going on about the war. Now, the war in Iran is being very, very unclear at the moment. Trump was saying the other day that he wanted to bomb Iran again. He wanted to go into all-out war. But then in the NATO interview and speech, he said that it would be better if they did not resolve to those violent terms and go back into lowering the oil price.